Good morning, everyone, and welcome to the August 6th, 2024 edition of the Premarket Prep session. I'm your host, Adam Holland, and this is where we go over the important news, notes, analysis, trade ideas that are key to making sure you're consistently profitable out here in markets, as well as not on the wrong side of things like we got over the course of this weekend, right? Friday, I dropped analysis in our trading group. We were bearish. We had a chart pattern, right, called a bear flag on the daily that clearly showed that we had probability to continue downward as long as we closed beneath a certain level. We closed beneath that level, and then we sold off over the weekend, right? So the charts are just a representation of the battle going on between buyers and sellers, a visual representation. When you figure out how to glean the most information possible from that, you always have a pretty good idea, right, of what's going on. But it takes the right system, it takes the right knowledge, it takes the right mindset. You trying to get into markets and having zero knowledge whatsoever is just a perfect setup for money to flow from those that lack knowledge to those with it, right? For those without foresight to those with it. So I'm excited to get into what we have going on today. I know we're getting kicked off right on time, but had some unexpected visitors. Now, we're playing host, so it'll make for a nice fun Tuesday morning. But we got stuff to get to, so let's go ahead and get to it. We're always here to do one thing and one thing only, right? That Kaizen philosophy, getting 1% better daily. That's our goal. If you do that, that's how you make sure that you're not waking up on Monday like the majority of people did, scared of what's going on in markets and having absolutely no idea, right? The sell off was something that we understood as a high probability, right? Something that was expected. Even when we first started selling and we peaked out at new all-time highs, called that all-time high and said, hey, we're falling from here because we had a rising wedge on the 4 hour that SPY fell out of, and that began the selling, right? So we were aware from the beginning when the selling occurred, right? And then the legs of the selling that followed, for the most part, we were on top of those. I think there was one that caught us off guard, but other than that, we've been on top of it. And that happened as a result of investing in ourselves daily, right? So that's what we're looking to do here today during this session. So our top news, and you want to also have intention about each and everything that you're doing, right? So if you're here, make sure you tend to the little things. Drop a one in the chat, whether you're watching live or via replay, signifying your intention to get 1% better, right? If you keep trying to take shortcuts, you will get cut short. There are certain things that you cannot go around, right? There are certain things that you don't think are important that are important. And if you don't follow these rules, right, and you fight against it, you're fighting against the tide. And that is the first rule of what you never do in markets, because nobody has pockets deep enough to change the tide of what big money's doing, right? Um, so let's get into it, right? Let's get into what we got going on today. Top news: game of Monopoly. How big can big tech get before big tech could get wrecked? Say that 10 times fast. Tongue twisters, market twisters, and even legal twisters are enveloping the high flying tech industry, which has helped propel stocks to record highs in 2024 until yesterday. Still record highs, right? And what's also tough is that everybody says there's no way I'm buying stocks at these prices. And then the stocks drop, and then they go, oh, there's no way I'm buying here. They got to go lower. Why? Why? Right? Do you have any technical reason, right? Where you look at a chart and you say, okay, based off of these one and zero quantitative reasons, this is why this stock will likely do this or that. If you can't do that, then there's no reason for you to be saying, oh, well, I'm just going to wait until the dip dips more. And no, there's no guarantee that the dip dips more, right? If you just want to make sure you're involved in markets, right, in the bare minimum, and you want to like use no brain power, then you just need to be dollar cost averaging, right? So just set it up on auto invest where you're automatically buying, some ETF, right? Every week if you can, right? Put $100 a week, $50 a week, $25 a week, set it up and just let it go. But you try to time it and actively trade and leverage. There's tons of money to be actively leveraged out of markets if you know what's going to happen. But if you know you're not going to take the time to do that, you just need to put money into the S&P and let it roll, right? But there is no in between. It's like either you're going to learn how to do this, like driving. You don't just casually like dabble in driving. You either learn how to drive fully, right, via the rules and a formalized education and learning stuff in a specific order, or you don't drive, right? Because you're just going to continue to crash. Um, and that's where we're at here. So for my people who like, listen, I'm not going to do what I need to do. You just go ahead and turn it on where you just have automatic deposits where you just buy $50 a SPY every week. and go on about your life, right? The Nasdaq plunged 3.4% during a worldwide market meltdown. I love the terminology used, worldwide market meltdown, which happened to coincide with antitrust shots fired at one heavyweight in the technology sector. Bigger picture, in the crosshair since 2020, Google finally received a direct hit from the U.S. Justice Department in a legal suit over its search and text advertising businesses. A decision by U.S. District Court Judge Amit Mehta ruled that Google's exclusive search arrangements on Android and Apple devices reinforced its dominance and effectively blocked search competitors from succeeding in the market. It means the tech giant violated Section 2 of the Sherman Act to become the world's dominant search engine. In parentheses, Google currently controls about 90% of the online search market. I mean, yeah, right. All these big tech companies have monopolistic tendencies. Look at Apple and everything in between. Amazon, right? Amazon goes on and they see which products are most popular, and then they also go through all the reviews, and then they say, okay, well, based off the reviews, people love this, but they would like it even better if they just added this on. So we're going to make it. We're going to undercut the price by a few dollars, and then undermine the entrepreneurs that actually make Amazon great, right? Every company does this in some form or another. Every big tech company, you can't get that big without being, a leech that cuts some corners. Google is a monopolist. This is a quote, and it has acted as one to maintain its monopoly. Meta wrote in the 276-page decision. As geez, 276 pages. Wow. As an example, Google shelled out 26 billion in revenue share payments in 2021 alone, which was nearly 4 times more than all of Google's other search-specific costs combined. The deals gave Google default placement of its search engine at partners' key search access points, and quote, its partners also agreed not to preload any other general search engine on the device. Bottom line, while an appeal will mean additional years of legal wrangling, the most important outcome that investors are focused on is what kind of remedies will be proposed. Those could range from a breakup and forced divestitures to lighter changes such as limits on search agreements aimed at leveling the playing field. Quote, or excuse me, not a quote. The latest ruling not only changes the landscape of the online advertising world, but can empower other aggressive U.S. antitrust enforcers who have brought recent anti competitive cases against Apple, Amazon, and Meta platforms, whose ticker is Meta. In terms of with antitrust, I never really cared too much about it. Like again, it's one of those things where if it manifests on the charts, awesome, I'll care about it then. But as of right now, it's not seeming like it's affecting Google's pre-market price action at all. Um, Let me actually look and see here. Mm-mm-mm-mm. Yeah, actually, we're nearing a nice spot on Google. We are nearing a nice spot on Google. It's so unfortunate. Like if you're not tapped in with us, please do get tapped in with us. Email me subject line trade adam@adamhollandeducates.com, because there's so much stuff now that is just setting up to be in great spots. Some of them are at great spots, some of them aren't. So again, where you get in matters. What contract, what expiration you get matters. How you position your game plan when you're looking to take profit matters, right? If you were in Bank of America and you did not take profit when we took profit on Bank of America, which is when Warren Buffett started taking profit, you got absolutely destroyed not taking that profit on those shares or those, or those contracts at the right time, right? And all of that amazing long swing, all of 2024, Bank of America was just a rocket. All that was for nothing, right? So all of the little things matter. It's not just, oh, what stock should I get? Oh, when should I get it? You don't get paid when you buy a stock. You get paid when you sell, right? So you need to know when you sell. You need to have a management plan. So lock in with us now. Don't be that person that's still like, hey, I've been meaning to I've been what bigger gift could you get than the selling that's occurred over the course of the past 2 weeks? There is none, right? There is none. But where you get in matters, how you execute matters, whether or not this is over, all of that, right? All that analysis plays into things. So it is what it is. I know the value of what we do, right? This is just if you need a little kick in the butt, now is the time, right? You die looking like your decision, so make sure you make some that by the time you look in the mirror, right? When you're taking your last breaths, you like what you see. Stocks, big swings. Da, da, da. Okay. So the market meltdown seen yesterday isn't getting less volatile. I think we talked about that, right? Rebounding this morning. Maybe we didn't. The market meltdown seen yesterday isn't getting any less volatile, with things now moving in the opposite direction. Japan's Nikkei ended up the session up 10% overnight, marking its best session since 2008. That's the funny thing with all these, like, this is the worst since here and the best since there. It makes for great headlines, but like, what does it ultimately really mean? Um, that was following a plunge of 13% on Monday. Much of the volatility is said to have emanated in Japan, where a carry trade based on the yen went sour as the Bank of Japan raised rates. During the same week, the Fed signaled its intention to cut. That's what's tough about this tiny world that we live on, right? Everything affects everything else. Over in the US, stock index futures are rebounding this morning after the VIX volatility gauge soared to pandemic era highs. Note there were some S&P 500 winners during the wipeout yesterday, which also saw the yield curve uninvert for the first time in over 2 years. Yes, there were winners, right? And we were in them. That's the beautiful thing, right? Not only did I outline how we were likely to be bearish over the weekend, and I said, hey, I personally am not engaging in it because I'm watching to get a handle on where things stabilize, but this is your best bet, right? When it comes to the broader market indexes and that sentiment, and that selling is exactly what we got, right? And we hit our price targets to the downside, and we bounced after hitting our price targets. So um, there's the number one, identifying the selling is huge, but also identifying what is not getting wrecked is also big. Rocket Mortgage, right? We've been on Rocket for the past few weeks, and Rocket has been paying us. It was one of the few stocks that went green pretty much immediately after open, right? One of the few that went through a broke Friday's high to push even higher, right? So not only are we aware of the probability of the sell-off, and positioned accordingly, right? A number of you guys, albeit we weren't backing up the Brinks truck and super heavy in the positions, but we're positioned to take advantage of the selling, which came through great. But also, we were in what wasn't getting destroyed, right? That is how you move like an expert through markets. It's not always going to be pretty, it's not always going to be perfect, but the fact that you are more so on the right side than the wrong side is important. Gratitude in this game, very, very important. There are people who put their whole mortgage into calls last Friday, expecting that we would get a bounce because that's what's happened so far each and every time, right? We wake up, we sell down, the next day we get back up, and guess what? They got absolutely destroyed, right? So maybe you missed out on puts, or maybe you just got one, or maybe you just got two and you didn't get as many. Understand that there are plenty of people that woke up on Monday that actually had a very, very sad Monday, right? I'm not talking about, oh, I'm in leaps and my leaps are down, but I've got 350 days of time left. I'm not talking about that sad. I'm talking about you had contracts that expired this Friday. You woke up on Monday and everything got down. All that money evaporated. And the way that option dynamics and pricings go, you need to get, once something's down 50%, you need 100% move, right? Which is very unlikely to happen in a short time frame. You could definitely get that happening on a longer time frame, but on a shorter time frame, not as much, right? So understand, have gratitude, do the little things, and you find yourself in a much better position in life. But if you are constantly looking at what you don't have, what you could have done, what you should have been involved in, right? Don't beat yourself up over it. Just change what you can, and that's the future, right? What things you're doing now in order to make sure that you continue to get better, to close the gap between where you are and where you want to be, right? That's the only thing you can worry about. And for some of you, it's stepping up, becoming serious about putting your money to work for you in markets, right? And taking the steps that are necessary to do that. Don't try and cut corners, right? YouTube University ain't going to get it done. You got to learn the right things in the right order. And especially nowadays with all this volatility, have the right person with the right experience letting you know what's likely to happen, right? Um, Economic news here, data dependent, seeking to reassure investors. Federal Reserve officials chimed in as the market mayhem took center stage. San Francisco Fed President Mary Daly said monetary policy is clearly, quote, working in the way intended, and it's still too early to determine if there's real weakness in the labor market. Friday's job data isn't indicating a recession, added Chicago Fed President Austin Goolsbee. Quote, we shouldn't react to one number and we should always be forward looking, he further explained, noting that there's still no recession despite the yield curve being inverted for 2 years. It's arguable because we got the definition of a technical recession, which is 2 consecutive quarters of negative GDP. So technically, we already had one, but everybody loves to move the marker in order to push their own narrative. Tech news, rival AI, OpenAI co-founder John Schulman is leaving the company to join Amazon-backed Anthropic, which has developed ChatGPT rival Claude. Quote, this choice stems from my desire to deepen my focus on AI alignment and to start a new chapter of my career where I can return to hands-on technical work, he declared. Schulman's exit comes less than 3 months after Microsoft backed OpenAI disbanded its super alignment team, whose leaders quit the company, with one of them joining Anthropic. Only three of OpenAI's 11 co founders remain with the firm, which is significant, right? one of whom is taking a sabbatical through the end of the year. So it's kind of looking like everyone's dropping off, and it's just becoming Supreme Leader Sam Altman that is left remaining. Um, is that worrying? Might be, right? But again, until there's anything I can do about it, I'm gonna make sure that I'm using that to continue to put food on the table, right? And become extremely efficient and effective in the work that I do. And keep using it to bring in the bacon. In terms of today's markets in Asia, Japan up 10.2%, Hong Kong down 0.3, China up 0.2, India down 0.2, the FTSE in London up 0.1, Paris down 0.2, Frankfurt up 0.3, the Dow up 0.8, S&P up 0.9, Nasdaq up 0.9. Don't know if that's the same anymore. Things were looking awfully flat last time I peeked in there. Yeah, it looks like everything is going to open right around where it closed, to be honest. So if you're expecting, some crazy move up overnight like what they got in Japan, probably not. Could we get it during the day? It's possible, right? Possible. You see here, if at the very least, if SPY can get over 523.58 on the hourly, we can make something happen. But we've got to do that, right? We got to do that and make sure those requirements are met. We do that, maybe we move up. Otherwise, we could just, chill around here, and especially in this 500 area. I talked about it from 495 essentially to 523.58. We could just not 523.58 to where is it? 518. We could just bounce around, right? From 498. Right, there's 498, 495. From 495 to like 518, we can just ping pong around and establish a base if we don't, get it moving here. And then once we do get it moving, right, we got to get over a certain level in order to kind of reverse the bearishness that we've seen thus far, right? That 537.45. So it's important to know once you have levels and you have these things, and you understand the time frames and how they move and how to execute it's very easy to know, okay, we're out of the woods for now, or we're likely going to head lower. But if you're just out here free balling and guessing, and it's a very, very risky game, and you always end up wasting more money than if you just spent money investing in yourself to learn how to do what you're setting out to do. Because success leaves clues. There's a reason why we're in one of the few things that is still running while the whole world, right, the whole world's markets are burning. What else is happening? We'll wrap up here with our rapid fire stock news rundown. Australia Central Bank maintains interest rate for the sixth time. Super Micro's earnings are on deck. Here's what to expect. That's SMCI, right? It'll be very interesting to see what they have in terms of earnings and whether or not honestly, whether or not the earnings matters or it's mostly the outlook. So Warner Bros. Discovery, ticker WBD, wants to avoid a company breakup. And speaking of Supermicro, SMCI, they're a part of IWM, right? The Russell 2000. So that'll also affect however the Russell 2000 moves, those results that we get. I talked about how there was lots of put volume coming in on the Russell 2000, how it had a nice double top setup, and it ended up firing that as well. So we've really been, right when it comes to the analysis on a lot of these different indexes and these things selling, and that's where you want to be. You want to have an idea of what's happening. If there's a flood imminent, you're a lot better off knowing there's a flood. And then even if you do get nicked, right, for the most part, you're good rather than you just thinking everything is fine and you throw a cookout on the day that the flood occurs. And you're like, wow, this is actually horrible for me and all of my friends, right? There's somebody who went out and told all of their family, hey, you need to go ahead and buy NVIDIA calls that expire next week right now because, this selling has been going on, but it's been over a week and there's no way it's going to last any longer. And there's no quantitative reason behind why they're doing what they're doing. And they just got wrecked, right? Absolutely wrecked. Warner Bros. Discovery, ticker WBD, wants to avoid a company breakup. Palantir soars as AI strength propels growth, boosts outlook. Mideast watch rocket attack on Iraqi base injures U.S. personnel. SunPower, ticker SPWR, files for bankruptcy, enters stalking horse deal. NTSB to scrutinize Boeing 737 MAX manufacturing. FAA oversight, Democratic senators press DOJ and DEA to reschedule marijuana. Fannie Mae, Freddie Mac to set to tighten rules on multi-family properties. So, for my real estate people and real estate investors out there, might be tightening up some regulations. But we'll save that as a conversation for another day. Right. For right now, Let's continue to get 1% better daily. Let's go out, crush it where markets are concerned, continue being in the right things, avoiding the wrong things, and making money regardless of which way the market moves. Remember to be patient with yourself, right? But also be strict with the way that you kind of govern the little things, right? And you'll find that everything that you're looking for is typically a byproduct of you focusing on something that you really didn't think was that important to begin with, right? So I'll leave it off with that. Let's continue to crush it. Have a great week. Everybody was thrown off by the selling. We anticipated the selling on Friday. Let's stay ahead of the curve. 1% better daily, baby. Kaizen. Have a great rest of the day. I'll see you guys back here tomorrow morning for our next pre-market prep session. Have a good one.